Hello everyone, welcome to our answer discussion regards to chapter 4 homework. So we were to do problems number 1 and 2. I'm going to give you the answers for 1. Number 2 is really more of opinion, having to do with this ethical case from Tesco, actually over in the UK. So number 1, FASB sets the U.S. generally accepted accounting principles, while the PCAOB, or the Public Company Accounting Oversight Board, sets auditing standards for the auditors of publicly traded companies. So the FASB's accounting principles, PCAOB is auditing rules or auditing standards. SEC was created by the Securities Exchange Act of 1934 to protect investors. Remember, they supervise both the FASB and the PCAOB. So to make sure that they are doing what's necessary to protect investors. And they become the ultimate enforcers of the rules on both cases, although the PCAOB has some enforcement ability, but ultimately they can't actually put anybody in jail or sue anybody for not doing what they're supposed to do. That's SEC's job. The EITF, or the Emerging Issues Task Force, all right, is number 3, helps apply U.S. generally accepted accounting principles to new situations. Remember, they don't have to go to a public forum. They do not have to disclose all of the steps of the rules like the FASB does to get a rule. So they can do it quicker when there's things that are new or things that are narrowly focused. And then finally, the Auditing Standards Board, under the AICPA, American Institute of Certified Public Accountants, sets auditing standards for auditors of private companies, anybody who's not publicly traded. If you do an audit, then you need to look for those. So it's not a matter of who the auditor is, it's a matter of the company they're auditing. Is it a publicly traded company? Then the auditor has to use these rules. If it is a private company, not publicly traded, then they can use these rules. And remember, there's not as much difference as that sounds, but there is a different level of, you might say, detail. So we're looking for some complete answers here. So did they breach their duty when they presented information that was incorrect? Even if they thought it was going to help investors, meaning they wanted to cover up that the company wasn't doing as well, which would ultimately make the stock go down, right? But as it's stated in the case, the stock goes down substantially anyway. Okay, so some interesting questions. Do you think that was a mistake? If they made a mistake, do you think that they should be held liable? What would you think if you were a shareholder? What would you do if you're one of the accountants that was under this kind of pressure? So some things to think about and write about. If you feel like that you can add to that based on rethinking it, go ahead and make corrections as needed. So number 1, research. First thing we're asked to do is go to www.twc.com. So that would look like this. So if you look at About Us, you'll see there's quite a bit of information about the process. If we come to the global annual review, I think we get to our global PwC, which shows offices all over the world. not just in the United States. So by getting to the global part of their financial of their website, you can pick any of the 157 countries, and you can see where some of them are located, even all over the world, to answer that question. So lots of right answers there. So we go back to the United States. We can look at the services they offer by just clicking on services, and you can see a whole bunch of things that they do. They provide forensics, risk assurance, consulting, digital services, tax services, help you plan your workforce, all sorts of things. And then if we go to the audit and assurance services, so we're talking about auditing, checking those numbers we've talked about. And so that is what comes under that assurance services, as well as these other things. Financial statement assurance, that's the type of audit, but they also do blockchain and board governance, cybersecurity, accounting advisory committees. All of these are under that assurance service as well. So they can provide you with lots of things, and it really goes hand in hand with the audit. As they're checking the numbers and visiting with your firm, they can also identify ways to give you to better implement technology and that sort of thing. So then our next thing is we're going to go to check on Dell's financial statements. And like usual, we have to go to the bottom and to investors, investor relations, and we're going to look for the annual report. We'll get the last annual 10K, and we'll pull it up as a PDF. And we're looking for the audit report, which is going to be item 8. Okay, report of registered public accounting firm. So this is a publicly traded company. So the firm that does the audit has to be governed by the rules of the PCAOB. Okay, so this is all the report here by PricewaterhouseCoopers of Austin, Texas, as of March 27th, 2020. And this is states that this is a unqualified opinion. Okay, we have audited, all right, this. In our opinion, the consolidated financial statements present fairly in all material respects, meaning there's no material misstatements. And in our opinion, the company maintained in all material respects effective internal control. And the reason why they believe that that is because they did an audit. This is the basis and the way that they did the audit in this next paragraph. And then, yes, there are explanatory paragraphs, critical audit matters, some things that were particularly complicated, including revenue recognition. All right. Goodwill was another one they identified. Intra-entry transfer of intellectual property rights. That does sound complicated. All of those, and then how they responded to those is part of that audit report. And so, yes, there was the opinion on the internal control included as part of the audit report. So that's what you should have gotten from your homework. Make any corrections necessary and put it back in the Dropbox.